What's the difference between revenue and cash, and how can it be explained in a footballing context? Revenue is one of the most important metrics used to explain on-pitch and financial success in the football industry. Why is that? The industry has a history of being loss-making. Both as an industry and the individual football clubs within it, on the whole, will make losses. That makes a comparison of success financially and on the pitch quite difficult. That is when you're looking at the bottom line, also known as profit or loss in this case. So we tend to use a metric that is consistent across the industry, that is derived from on-pitch success, and that's revenue. But what's the difference between revenue and cash? Revenue is an accounting concept. Cash is fact. In the world of football, revenue is derived from matchday income, broadcasting income, and commercial revenue. Quite simply, tickets and hospitality, TV money, and largely sponsorship and other forms of income. A cash transaction is simply based on whether money has transferred from one bank account to another or has been passed physically between two parties. There's no questioning whether that's happened. It's based on fact. Whether cash has changed hands has no influence whatsoever on the revenue that's being recognised. Revenue is based on concepts of performance obligations, whether they've been performed or not. If cash has changed hands or if invoices have been raised, it makes no difference. Revenue can be accrued or deferred. Let's use a football example. Very simply, season tickets. Let's say season tickets go on sale at the 1st of April before the season's even started. Some people will simply walk to a ticket office and pay, let's say, £300 for a season ticket. The cash has changed hands. The fan has passed the cash to the club. That is a fact and cannot be disputed. But the revenue is not going to be recognised on that day, or at least it shouldn't. It should be spread across the number of games that will be executed or performed in those performance obligations on the club to provide access to the stadium over, let's say, the 19 games of the following season. So there's a total mismatch between when the cash is being transferred and when the revenue is being recognised. Financial fair play rules are based around a concept of accounting rather than on fact. They look at revenue and costs, which can be subject to judgmental influence, as opposed to cash transactions, which are much more difficult to argue whether they have happened or not. Is this the right way forward for financial fair play in the world of football? Or should we challenge what we've done in the past and make it more fact-based? The cash flow statement in a set of financial statements will tell you what's happened from a cash perspective, if it exists. Some clubs will be exempt, and that's if the cash flow statement is available in a wider organisation. Financial fair play submissions are not available in the financial statements of clubs. What do you think about the concepts of financial fair play being more accruals-based, such as revenue and costs, versus what could be a more fact-based alternative and potentially based on cash transactions? It definitely would simplify things, and potentially finance professionals may not be required to interpret the rules. But would that be for the better of the game? Leave your comments below. If you like the video, hit like and subscribe for more. My name is Neil Wood and I'm a football finance professional.